Hello everyone, welcome to EPK Capital. Here we simplify wealth management and investments so you can build wealth for generations. As a bonus, I have created an in-depth guide to the 7 costly tax traps for high net worth NRIs, a strategic report on avoidance and compliance. You can download it simply by clicking on the link in the description. Let's get started now. Today is Tuesday, December 9th, and we are breaking down the major market moves from yesterday, Monday, December 8th, 2025. If you are watching this, you are likely preparing for the Federal Reserve's pivotal interest rate decision later this week. Yesterday, Wall Street gave us a clear signal. Optimism is the name of the game. In this video, we're going to cover the final closing numbers, how the major indices performed to kick off the week, the macro picture, why inflation expectations are keeping the Fed pivot dream alive, political shockwaves, President Trump's latest comments on the massive Netflix-Warner Bros. Deal, and President Macron's trade ultimatum to China. Crypto Corner, Bitcoin's resilience above 91,000, and the strategic reserve, rumors fueling the fire. Let's dive in. Let's start with the scoreboard. Monday was a day of steady, calculated buying as investors positioned themselves ahead of the Federal Reserve's final meeting of the year. The volatility we saw last week calmed down, replaced by a risk-on sentiment. Here is how the major U.S. indices closed the session on Monday, December 8th, 2025. The S&P 500 finished the day up 0.19%, closing at 6,883. The index is now knocking on the door of its all-time highs, driven largely by strength in the technology sector. The Dow Jones Industrial Average added roughly 104 points, or 0.22%, to close at 47,982. We saw a solid rotation into industrial and financial names, keeping the blue chip index in the green. The Nasdaq 100 outperformed the broader market, climbing 0.43% to settle at 25,762. Tech continues to be the safety trade of choice for growth investors. Global markets also showed resilience. In Asia, Japan's Nikkei 225 managed a gain of 0.12%, shrugging off a downward revision in GDP data, while China's markets outperformed significantly, buoyed by better-than-expected export data. Now, let's talk about why markets drifted higher. The dominant narrative yesterday was Fed optimism. Markets are currently pricing in a near certainty of a 25 basis point rate cut when the Fed concludes its meeting this Wednesday. But what solidified this view yesterday? The data point. On Monday morning, the Federal Reserve Bank of New York released its survey of consumer expectations for November 2025. The headline number for one-year-ahead inflation expectations came in steady at 3.2%. Why this matters? This data is crucial because it tells us that consumers do not expect inflation to re-accelerate aggressively. For the Fed, anchored expectations are a green light. It gives them the breathing room to cut rates to support the labor market without fearing they are unleashing an inflation spiral. We also saw a drop in the 10-year Treasury yield, which hovered around 4.12%. This pullback in yields acted as a tailwind for the tech stocks we saw rallying in the Nasdaq. International macro, briefly touching on the global scene. China's export growth beat estimates yesterday, signaling that despite trade war rhetoric, the world's second-largest economy is still finding buyers for its goods. This helped lift sentiment in global industrial stocks, offsetting some of the gloom from Japan, where final data confirmed the economy shrank in Q3, complicating the Bank of Japan's path to hiking rates. Moving on to the political landscape, we had 2 major stories yesterday that investors need to watch. 1. Trump on the Netflix-Warner Bros. Deal. First up, the United States. President Donald Trump made headlines yesterday regarding the proposed $83 billion merger between Netflix and Warner Bros. Discovery. Speaking to reporters, Trump explicitly stated that the deal could be a problem due to the sheer size of the combined market share. He noted that while he respects Netflix leadership, the consolidation of 2 such massive content libraries raises significant antitrust questions. He added, "I'll be involved in that decision." Market impact. This comment sent shivers through the arbitrage market. Warner Bros. Discovery shares saw increased volatility as traders reassessed the regulatory risk. The market is waking up to the reality that a Trump administration, while generally pro-business, may still be populist when it comes to big tech and media dominance. 2. Macron's trade ultimatum across the Atlantic. French President Emmanuel Macron ramped up tensions with Beijing. In a statement yesterday, Macron warned that the European Union would be forced to take strong measures, implying severe tariffs, if China does not address its massive trade surplus with the bloc. Macron called the situation a matter of life and death for European industry, specifically citing the auto sector. Market impact. This rhetoric weighed on European luxury and auto stocks late in their session, as these companies are heavily exposed to Chinese retaliation. It's a reminder that while the US-China trade war gets the headlines, the EU-China front is heating up fast. Finally, let's check in on the crypto markets. Bitcoin had a strong showing on Monday, trading up approximately 1.5% to hover in the 91,300 to 91,500 range. What is driving this? Two things. Fed liquidity. As we mentioned, the expectation of a rate cut is weakening the dollar slightly and boosting hard assets like Bitcoin. Strategic reserve speculation. The rumor mill is spinning again regarding a U.S. strategic Bitcoin reserve. Speculation is growing that the incoming administration is serious about inventorying crypto assets seized by agencies rather than selling them, effectively creating a soft reserve. In other news, Binance scored a major regulatory win yesterday, securing a full crypto license in Abu Dhabi. This is a significant step for institutional adoption in the Middle East and provided a nice boost to broader market sentiment. So, what is the takeaway for today, Tuesday, December 9th? We are in the calm before the storm. The Federal Reserve begins its two-day meeting today. Volume might be a bit lighter as traders hesitate to place big bets before the decision is announced tomorrow afternoon. Watch the 10-year Treasury yield. If it breaks back above 4.15%, stocks could stumble. And keep an eye on Netflix and Warner Bros. If Trump's comments gain more traction, we could see that merger spread widen further. That's your report for the last 24 hours. If you found this helpful, hit that like button and subscribe for our full breakdown of the Fed decision tomorrow. Let's get after it today. Thanks for watching.